The Kansas City Community of Reason presents a lecture by Dr. Sheldon Stahl, former economist for the Federal Reserve and professor emeritus of Rockhurst University, recorded August 3, 2008. Dr. Stahl's topic is the upcoming economic stakes in the November general election. In Part 6 of his lecture, Dr. Stahl explains how, since 2003, under the Bush administration, traditional mortgage lending was rapidly changed into a worldwide con game based upon invented derivative securities with no ascertainable value. These securities are the cause of the current financial crisis.
Beyond 2003, that was a time when the Fed had lowered federal funds rate down to 1%. Banks were flush with reserves and the ability to loan. The president said home ownership is something that we as Americans should be proud of, and therefore we want policies that are friendly to potential home owners, and keeping interest rates down is about as friendly as you can get. And so beginning at around 2003, when I bought this house out in Bridlesburg, people started getting mortgages that had funny names. They were no longer fixed rate mortgages. They had adjustable rate mortgages. They had option adjustable rate mortgages. They had all sorts of mortgages. You could get a mortgage with an interest rate, a teaser interest rate of next to nothing, and you didn't realize that when it reset, your payments would run dramatically higher. You could take that fixed rate mortgage and live with it. They weren't pushing fixed rate mortgages. And companies that did nothing more than originated mortgages all of a sudden bloomed like payday loan outfits in America. Okay? And no longer did that friendly savings and loan officer insist that, by golly, you had to show him or her that you could pay for the loan. Forget about it. Or as they said in The Sopranos, forget about it. Forget about it. There wasn't such a thing as you can't afford the house. You want this house? We'll take care of it. We'll make it work for you. And we'll give you a piece of paper that will allow you each month to pay some of the principal if you want to pay some of the interest if you want to pay all of that monthly principal payment if you want to, all of that monthly interest payment, or none of it, or none of it. And hundreds of thousands, if not millions, of these mortgages were made and were foisted off on many people whose sophistication about what the paper they were signing was de minimis at best. It was greed on the part of the lenders, certainly naivete on the part of many of the buyers, but there was some greed there as well. Wow, I can buy this house and I don't have to have any money down and I don't have to pay the principal or interest each month if I don't like to. You know, in the trade they had a name for those mortgages. They were called liar loans. Liar loans, because there was no need for documentation to verify the financials. And the reason there was no need for documentation to verify the financials is because the lender was conjuring up the financials out of midair. Well, think about it. Banks or financial institutions take whatever loanable funds they have and they make loans. That's what banks do. They make loans. And the loan they make results in a piece of paper. They exchange relatively liquid assets, their reserves, for a less liquid asset, that mortgage. But if they put that mortgage in a file and let those mortgages pile up in there, they're not getting any additional funds to make additional loans, other than what? The monthly payments that come in. So our financial system, which is never at a loss for creativity, came up with a method of taking these mortgages and using these mortgages to collateralize a new financial instrument that could be sold to investors that would reward the mortgage companies and the banks with additional funds to make additional loans, which would then be packaged together and sold to investors. That process was called securitization. Securitization. Literally, financial entities, banks, would take bundles of these mortgages, which were kind of dubious to begin with, okay? They would bundle them together, and somehow it's like, you know, this transmutation of lead into gold. You would take a bunch of crap and squeeze it all together, and it would come out smelling like a rose. Well, these collateralized debt obligations, okay, would represent bunches of mortgages, some very good mortgages, some not so great, but they would all be put together, and a bond was created that was collateralized by these bundles of mortgages, okay? And that bond could be sold to investors if investors were of the belief that that bond really did have some integrity to it. So let enter the scene Standard & Poor's and Moody's, two long-time financial entities that were called rating agencies, R-A-T-I-N-G, rating agencies. And what they would do would be to look at these various financial instruments, and they would assign a rating, AAA, AA, what have you, depending upon what they perceived of as their liquidity and the level of risk. And obviously, the higher the level of risk, the greater the return associated with it. The lower the level of risk, the less the return. So these mortgages could be in turn cut into slices like a pizza pie and made to appeal to people who had high risk preferences, moderate risk preferences, very low risk preferences. So here was an instrument that allowed this game to continue to be played. In addition to that game that was being played, these same financial institutions were coming up with all manner of creative instruments called financial derivatives. Instruments that were based not on anything real, but on other pieces of paper. I mean, never in my history as an economist have I ever seen such financial creativity to such a poor end. And let it be said that during all of this that was going on, who was sitting as the chairman of the Federal Reserve Board of Governors of Washington? God himself. Alan Greenspan. Alan Greenspan.
The preceding program has been a presentation of the Kansas City Community of Reason. Please visit our website at www.communityofreason.net for more information about our group and our weekly programs.